Level 1, the new hire. You show up on a Monday. They always start you on a Monday. You are wearing a suit you bought 2 days ago because the one you wore to the interview did not feel right anymore. You ironed the shirt twice. The building is bigger than you expected. Not the outside, the inside. The floors, the hallways, the rows of desks behind glass walls. The hum of a place that was already running long before you got here and will keep running long after you leave. You are not important to this building. Not yet. Maybe not ever. HR takes an hour and a half. You sign things you do not fully read. They hand you a badge with a photo that already does not look like you, a laptop that takes 40 minutes to configure, and a temporary password you will have to change before lunch. They assign you a desk next to a man who does not look up when you sit down. He is on the phone. He is always on the phone. You will learn that later. They sit you down in front of the loan origination system. It is the most important piece of software in your professional life, and it looks like it was designed in 2004. Because it was. You stare at fields you do not understand. LTV-DTI, FICO tier, conventional, FHA-VA jumbo. Every one of those words means something specific, and, maybe 3 of them. Nobody expects you to know them yet, but nobody is going to wait very long for you to learn. They give you a literal script, printed, laminated, with highlighted sections. This is what you say when a client calls. This is what you say when a realtor calls. You will memorize this script, and then, in about 3 months, you will throw it away because you will have learned something no script can teach you. Every single person who calls you about a loan is terrified. They are about to make the largest financial decision of their lives, and they need someone to make them feel like everything is going to be fine, that someone is supposed to be you. You do not know how to be that person yet. On Friday, you shadow a senior loan officer on a call. He has been here 7 years. You listen to him pull up a file, scan the numbers, calculate the DTI in his head, identify the right product, quote a rate, and lock in a timeline, all while making small talk about a football game. 4 minutes. No hesitation, no script. You look at your laminated sheet and you understand something. The distance between where you are and where that man is cannot be measured in weeks of training. It is measured in hundreds of conversations you have not had yet and mistakes you have not made yet. There are 4 other new hires. You eat lunch together on Tuesday. By the end of the first month, 2 of them will be gone, not fired. They will just stop showing up. Nobody will talk about them after the first week. That is the first real lesson this place teaches you. It is Monday again. You are back. The man next to you is still on the phone. Level 2, the shadow. Someone decided you are worth investing in. You do not know exactly when that decision was made or what you did to earn it. But one morning, your manager tells you that you are going to start sitting in on calls with Marcus. That is the man from Friday. The one who did in 4 minutes what you cannot do in 40. You pull the chair next to his desk and you listen. You listen for hours, for days. You watch him take a call from a realtor who has a buyer under contract with a closing date in 21 days and a credit score that sits right on the edge of qualifying. You watch Marcus not panic. You watch him ask 3 questions, pull 2 reports, and tell the realtor that he can make it work. But the buyer needs to bring 6,000 more to closing. The realtor pushes back. Marcus does not move. He says the number again, calmly, like he is reading the weather. The realtor agrees. The call ends. Marcus is already dialing the next one before you finish processing what just happened. You start to understand something that the training videos never mentioned. This job is not about mortgages. Mortgages are the product. This job is about reading people. It is about hearing what a realtor is actually saying underneath what they are saying. When they say the buyer is flexible on timeline, they mean the deal is falling apart and they need you to move faster. When they say the buyer has great income, they mean the credit is a problem and they are hoping you will not ask about it yet. Every sentence has a second sentence underneath it. Marcus hears both. You are still only hearing the first one. He lets you take your first call at the end of the second week. A refinance. Simple, low risk. The kind of loan that processes itself. Your hands are sweating on the keyboard. The client asks you what the rate is. The rate. You have looked at it 14 times today. But for a half second, your mind goes blank, and the silence stretches, and you hear yourself say a number that is not wrong, but that is also not the best number you could have given. Marcus is watching. He does not say anything. After the call, he tells you one thing. Hesitation costs money. Not your money, theirs, and they can hear it. If you do not sound like you know, they do not feel safe. And if they do not feel safe, they go to the loan officer who makes them feel safe, even if that loan officer is giving them a worse deal. That is the lesson of this level. Confidence is not optional. It is not a personality trait. It is a professional skill, and you either develop it or you do not survive in this building. The clients are not paying for your knowledge. They can Google rates. They can read about loan products. They are paying for the feeling that the person on the other end of the phone has done this 1,000 times and that everything is under control. Whether everything is actually under control is a separate question. You are learning not to let those two things show on your face at the same time. You have closed 0 loans. You have made your company $0. You have a salary that covers your rent and not much else. The pipeline is empty. Your phone does not ring because nobody knows your name. You are a shadow. And shadows do not earn commission, but you are listening, and you are starting to hear the second sentence. Level 3, the grinder. You are on your own now. No one is sitting next to you. No one is listening to your calls. The training wheels came off, and nobody told you exactly when it happened. It just did. One day, Marcus stopped pulling a chair for you, and you understood. Your phone does not ring. That is the problem. In this job, the phone ringing is everything. A ringing phone means a realtor thought of you. It means a client was referred to you. It means you exist in someone's mind as the person who can help them buy a house. Right now, you do not exist in anyone's mind. So you do the only thing you can do. You pick up the phone and you call them first. Cold calls. You make 40, 50, 60 a day. You call realtors you have never met. And you introduce yourself and you hear the pause on the other end that tells you everything. They already have a loan officer. They already have 3. Why would they send a client to someone with no track record, no closed deals, no reputation, when they have someone who has been closing for them for 5 years without a single problem? You do not have a good answer to that question yet. So most of them say no, politely or not politely. Some just hang up. You learn something about rejection in this phase that changes you. It is not personal, but it feels personal every single time. The 20th no of the day feels exactly like the first one. You thought it would get easier. It does not get easier. You just get more stubborn. That is the difference between the people who survive this level and the people who do not. It is not talent. It is not charm. It is the willingness to dial the next number after the last one went nowhere. You close your first loan on a Thursday afternoon. A purchase? $280,000 conventional 30-year fixed. The commission is not life-changing, but you stare at the screen after it funds and you feel something that is hard to describe. You built that from nothing. From a cold call to a realtor who almost did not take your call, to a client who almost went with someone else to a file that underwriting kicked back twice to a closing that nearly fell apart over a termite inspection. You held it together. Barely, but you held it. The second loan comes faster. The third faster still. A realtor who sent you one client sends you another because the first one closed on time and without drama. That is the currency of this business. Not rates, not products, not marketing. Reliability. You said it would close on the 15th and it closed on the 15th. That realtor will remember that longer than any rate sheet you ever send them. You are making money now. Not much, but more than salary. Your pipeline has 4 loans in it, then 6. You work 12-hour days and you do not notice because the work has a momentum to it now that pulls you forward. You are tired in a way that you were not tired before, but it is a productive tired. You are building something. You are no longer a shadow. You are a grinder. And the grind has only just started. Level 4, the closer. Your phone rings now. That sentence does not sound like much, but it is everything. 6 months ago, you were dialing 60 numbers a day, begging for a chance. Now, realtors call you, not all of them. Not the big ones yet, but enough. A realtor in the suburbs sends you 2 deals a month. A builder you met at an open house sends you his buyers. A past client refers a coworker. The pipeline is not something you have to chase anymore. It is starting to come to you. You have closed enough loans to understand something that no training manual explains. There are 2 kinds of loan officers in this building. There are processors and there are closers. Processors know every guideline, every condition, every exception in the FHA handbook. They are technically flawless, and they will never make serious money because technical knowledge is not what closes a deal. Closers understand that a loan is not a file. A loan is a relationship between a buyer who is scared, a seller who is impatient, a realtor who needs the deal to close so they can pay their own mortgage, and you. You are the person who keeps all of those people calm at the same time. That is the skill. Everything else is paperwork. You start losing deals to other loan officers inside your own building. That is something nobody warned you about. The competition is not just the guy at Wells Fargo or the broker down the street. It is the person sitting 3 desks away from you who has a relationship with the same realtor you have been building for months. You find out on a Tuesday that a realtor you thought was yours sent a deal to someone else in your branch. You do not say anything, but you feel it. And you learn something about this business that stays with you. There is no loyalty that a better rate sheet or a faster closing time cannot break. Relationships matter, but they are not permanent. They are maintained or they are lost. You are making real money now. Your commission checks are larger than your base salary. You buy things you did not buy before. You go to dinner on a Friday without checking your account first. But here is what nobody tells you about commission income. It is addictive and it is unstable. A good month makes you feel invincible. A bad month makes you question everything. And the distance between the two can be a single deal falling through on the day of closing because the buyer's credit card payment posted one day late and dropped their score below the threshold. You check your pipeline before you go to sleep. You check it when you wake up. You are not sure when that started, but you cannot stop. Level 5, the player. You are performing. The numbers on the board next to the manager's office have your name near the top, and you look at them every morning even though you tell yourself you do not. 12 loans closed last month. 14 the month before. The realtors who would not return your calls a year ago are now taking you to lunch. You pick up the check. That is new. You understand the game now in a way that you did not before. It is not enough to close loans. You have to close the right loans. A jumbo loan on $1 million property generates more commission in one file than 5 FHA deals combined. So you start positioning yourself. You attend networking events in wealthier zip codes. You build relationships with realtors who work luxury listings. You start turning down small deals, not openly, but you stop returning certain calls as quickly as you used to. You're not proud of that, but you understand why it happens. The math is simple, your time is finite, and your income is directly tied to how you allocate it. The money changes things, not all at once, but steadily. You lease a car you would not have leased 2 years ago. You move apartments. You pick up tabs. People in your life start treating you slightly differently, or maybe you start treating them differently. It is hard to tell which came first. You are working more hours than you have ever worked. Saturdays are not days off. They are days when clients who work during the week can finally talk. Sundays, you prep files for Monday morning. Your phone has not been on silent in 8 months. And then the Fed raises rates. A quarter point. Then another. The refinance market disappears overnight. Half of your pipeline evaporates in 2 weeks because every deal that was on the edge suddenly does not make financial sense anymore. Buyers who were pre-approved at one rate are now looking at monthly payments $300 higher and walking away. Realtors who were sending you 4 deals a month are sending you 1 because there are fewer deals to send. You watch loan officers around you get laid off. Not the ones who were bad at their jobs. Some of them were good. They just did not have enough volume to justify their desk when the market contracted. You survive the cuts, but you sit in a building that is noticeably quieter than it was 3 months ago. Empty desks, fewer phones ringing. You understand something now that the good months never taught you. You do not control this. The rates, the market, the economy. You are building a career on a foundation that someone else can move at any time. And they just did. You are still here. But you are paying attention in a way you were not paying attention before. Level 6, the politician. You survived a market correction. That sentence separates you from half the people who started when you started. They are selling insurance now, or doing something in fintech, or they went back to school. You are still here. And the people who are still here treat you differently because you are still here. You are not just closing loans anymore. You are managing a network. Realtors, builders, financial planners, CPAs, divorce attorneys, estate attorneys. Every one of those people can send you a deal, and every one of those relationships requires maintenance. A lunch here, a call on their birthday, a referral sent their way so that the relationship flows in both directions. You spend almost as much time managing relationships as you spend on actual loan files. That ratio surprises you when you think about it. You thought this job was about mortgages. It is about people who know people who are buying houses. Inside the building, the politics are getting thicker. A management position opened up and 2 senior loan officers want it. Neither of them is you, but both of them want you on their side. Because your production numbers give you weight in conversations that have nothing to do with production. You learn to navigate this without committing to either side. You say the right things to the right people at the right time, and you say nothing when saying nothing is the smarter move. This is a skill you did not know you were developing, but you have become very good at it. Compliance is watching you closer now, not because you are doing anything wrong, but because your volume is high enough to trigger reviews. Every loan you touch gets audited. Every disclosure gets checked. You become meticulous in a way you were not meticulous before. because you understand that one mistake at this level does not just cost you a deal, it costs you your license. And your license is everything. Without it, you are not a loan officer at Chase. You are someone who used to be a loan officer at Chase. You start training new hires. Your manager asks you to sit with them the way Marcus sat with you. You watch them stare at the LOS the way you stared at it. You watch them hold the laminated script, and you feel something strange. Not nostalgia exactly, more like vertigo. The distance between who you were on that first Monday and who you are now is so large that they almost feel like two different people. You are still checking your pipeline before bed. But now you are also checking things that are not in the pipeline. Market forecasts, Fed minutes, housing inventory reports. You are thinking further ahead than you used to. That is either wisdom or anxiety. Most days you cannot tell the difference. Level 7, the veteran. You have been doing this for 7 years. You have closed more loans than you can count. You have survived 2 rate cycles, 1 housing correction, a pandemic that moved everything to Zoom calls for 18 months, and 3 different branch managers who each had a different vision for how things should be run. You survived all of them. That is your resume now. Not the one on paper, the real one. Your name means something in this market. Realtors you have never spoken to know who you are because other realtors mentioned you. Clients find you through referrals that trace back 4 or 5 connections deep. You do not cold call anyone. You have not cold called anyone in years. The business comes to you and it comes consistently enough that you can predict your income 3 months out with reasonable accuracy. That predictability is something you would not have valued at 25. You value it now. You have seen everything. The borrower who lied about a second job that did not exist. The divorce that finalized 3 days before closing and changed every number in the file. The appraiser who came in 40,000 low and nearly killed a deal that took you 2 months to build. Nothing surprises you anymore, and that is both your greatest asset and the thing that worries you most. Because you remember when this job made you feel something. The first loan you closed, the family that sent you a photo of their kids standing in front of their new house. You kept that photo in your desk drawer for a year. You do not remember when you stopped keeping those things. The new hires look at you the way you looked at Marcus. You are Marcus now. That realization arrives without warning on a Wednesday afternoon when a kid in a new suit pulls a chair next to your desk and opens a notebook. You hear yourself say things that Marcus said to you, and you wonder if he learned them from someone else, who learned them from someone else. A chain of knowledge passed down through desks and buildings like this one going back decades. There is an offer on the table, branch management, more money, more stability, a title. But it means you stop originating, you stop closing. You become the person who manages the people who close. You have watched managers in this building and you know what that job actually is. It is spreadsheets and meetings and performance reviews and being responsible for numbers that other people produce. You are not sure that is what you want. You are not sure what you want anymore. That is new. Your phone buzzes, a realtor, a deal. You pick up because that is what you have always done. But for the first time in 7 years, there is a half second before you answer where you wonder what would happen if you did not. Level 8, the Crossroads. You are standing in the parking lot. It is early. The building is still mostly dark. You are holding a coffee that has gone cold because you have been out here longer than you intended. You have been a loan officer at Chase for 9 years. You have closed somewhere north of 800 loans. You have made people homeowners. You have told people they cannot be homeowners. You have worked holidays, missed birthdays, answered calls at dinner, checked your pipeline from hospital waiting rooms. You have made more money than you ever thought you would, and you have spent more of yourself than you ever thought you could. There is a broker who has been calling you for months. He wants you to go independent. Twice the commission, no corporate structure, no compliance department reviewing every word you say. Just you, your relationships, and the open market. The risk is everything the safety net disappears. No salary, no brand behind your name. Just your reputation, and whether it is strong, enough to stand on its own. There is also a version of this where you walk away entirely. You have thought about it more than you have told anyone. What you would do. Who you would be. You have been this thing for so long that the question feels dangerous. Not financially, personally. You are not sure where the job ends and you begin anymore. That used to not bother you. It bothers you now. Inside that building right now, someone is sitting at your old desk. A new hire. First Monday. Suit that does not fit quite right. A laminated script and a login that keeps timing out. They are staring at the LOS and none of it makes sense yet. They have no idea what this place is going to ask of them, or what it is going to turn them into, or how many times they are going to want to quit. before they stop wanting to quit. They have no idea that 9 years from now, they might be standing in the same parking lot, holding a cold coffee, and wondering the same thing you are wondering right now. Your phone buzzes, you look at it, a realtor, a deal. You have not decided yet.